Now, Kenya's economy is expected to grow by about 6% in 2013, raising optimism for East Africa's largest economy. In this particular instance, we're looking at the release of the 2012 Economic Survey, which, of course, is an enormous treasure trove of data. In this particular year, it grew up by 4.6% last year. The growth will mainly be driven, however, by key sectors like agriculture due to favourable weather being experienced so far this year. Domestic consumption is also expected to grow off the back of an expanding middle class. The ICT and financial sectors are also expected to play an important role. Optimism around growth prospects for East Africa's largest economy have risen after the country held a peaceful presidential poll earlier this year in March, in contrast to the violence-ridden election 5 years ago. Kenya has continued to grow despite the global economic and financial crises being witnessed in developed countries around the world. At this point, I should point out that the Economic Survey is one huge data dump, a serving of information on public affairs over 12 months. So right now, we'll be looking at some of the headline items. Duncan Miriri is the East African correspondent with the Reuters news agency. He's based here in Nairobi. He's live in studio with us tonight. Duncan, what are the highlights for you for the Economic Survey of 2012?
Rama, I think for me the highlights were looking at how these key sectors performed and the role they played in this headline number thereof. I think what was interesting is we saw some traditional sectors which have been drivers of growth, like financial intermediation, or even financial and banking, if you will. You know, the growth rate came off. It still grew, but at a slower pace, 1 percentage point below what it posted in 2011, and that is a factor of two things. First, there was caution around the, in the run-up to the March election, and also there were high lending rates in the economy. Remember, the central bank had sort of raised the rates in the run-up to 2012, and that really did hurt things like expansion of the credit to the private sector. That hurt banks. In turn, that cascaded down to other key sectors like manufacturing. It still grew, but I think growth came off when you look at the year-ago period, and also wholesale and trade. These are the sectors that are affected as a result of these key two factors. Now, what you need to look at the financial sector, which has traditionally been a key contributor of growth in recent years, is that you look at the sort of growth we saw in 2011, where credit to the private sector was growing at an annual rate of 35%, for instance, in September 2011. And now that was unsustainable because, on the other hand, you had a very weak currency, you had very high inflation, and something had to give. And I think what gave is that banks experienced much slower growth. Although if you do look at the individual banks, the blue chips, they still manage to post a decent profit. We should keep all investors happy.
Indeed. Let's talk about one of those sectors, agriculture. It led the growth, but the headline number essentially hides a few interesting sector deficits, if you will. Horticulture, for example, not doing too well. What happened there?
I think the one that carries a lot of weight in this sector, remember, it's a very key sector, accounting for a quarter of the entire GDP of this nation. I think what the officials were telling us is that tea production came off about 2%, which is which was contrary to what we've seen in recent years, where production has been going off, and that was attributed to poor weather in certain key regional growing areas in this country. Remember, there was a frost attack on for most tea farmers at the start of the year in key growing areas, and that did really have an impact on tea, both in output and also in the revenue earned.
Indeed. Finally, Duncan, let's talk about jobs. In headline numbers, nominal terms, the number of jobs created year on year was relatively high, 659,000, but the formal sector's contribution out of that actually shrunk. What happened?
I think what you need to realize, Rama, is that the informal sector has been a key driver of jobs generation in the economy for recent years, and it's down to all sorts of reasons. Remember, big companies may not be able to create jobs at the rate which is desirable for an economy like this one. But the informal sector, the wages may not be too high, the startup capital may not be too high. Probably there are even friendlier policies in that area than, say, what a big manufacturer would require to sort of, it would be required to go through a hoops of licenses, bureaucratic requirements. But informal businesses can start pretty quickly. I think this should give a message to the incoming government, analysts say, in that they need to foster even friendlier policies to be able to create more jobs in that sector. But I think looking further, beyond the jobs creation, you need to look at the revenue structure of this government, and you realize that still people who work in the formal sector still pay a higher share of a higher share of taxes than their counterparts in the informal sector. So probably the new government might also want to look at how they can bring more people into the tax bracket and sort of generate more revenue to drive their development agenda.
Indeed, and of course the Kenyan government has been heavily dependent on income tax revenue over the last couple of years. We'll leave it there for the time being. That's Duncan Miriri, he's East African correspondent for Reuters right here in Nairobi. He's been joining us in studio to talk about Kenya's compendium of numbers, including of course that $10 billion+ trade deficit. Staggering figures. We'll be breaking them down for you here over coming days.